Hello, this is Doc Severson for the ReadySetCrypto OMNIA newsletter market update for Sunday, the 5th of January. We'll start out today by looking at Bitcoin versus the US dollar on the Bitstamp exchange. Yeah, guess what? On Friday, we had a little pop to the upside, and this is because of global unrest. I think you guys all know what happened on Friday, so I'm not going to go into that. But we're kind of seeing that inverse correlation between the US stock market and Bitcoin again. So we've seen that kind of on and off over the last year. Sometimes it works out nicely. Other times it doesn't seem to have any correlation whatsoever. So right now it's not an edge that I want to put capital on. Now, as some people noticed in the OMNIA section on our Discord community, we do have what I would consider to be an inverted head and shoulders. We have a left shoulder, we have a head pattern down here, and then the higher low is forming the right shoulder. Now, I don't know how many people are talking about this right now. What we have is the distance between the neckline and the bottom of the head is essentially the kind of the forward projection for this if it were to break out. There's no guarantees that we're going to get this. This is not a prediction or anything like this. This is just kind of the average distance that they tend to go. And if you think about it, it makes sense, because if we have a huge pullback, like if we had a huge head pattern here, a huge pullback, and then a big right shoulder, this would show that we have a massive amount of shorts that are probably piling on way too late. We have a lot of short interest even for this one as well too. And so this does increase the probability that all that short interest has to be unwound to the upside. We don't really right now. I mean, this market doesn't know what to think right now. This is not really that strong of a move that we had to undercut 6,500. So we're just kind of seeing the same thing as we saw, about a year ago, where the markets just kind of went dormant for a while. It was just really quiet, and it was very difficult to get any kind of alpha in that sort of phase. You can go down in time frame, and this is what we'll talk about here in a few minutes, going down in time frame and kind of scalping this area. And this is what we were doing at this time a year ago before we finally got this, move to the upside. And this is what happens with Bitcoin. It just goes dormant, doesn't do anything at all, and then all of a sudden, wham, it starts to move. Goes dormant, and then it starts to move. So it's kind of the same old thing that we talk about. Range contraction eventually leads to range expansion. The problem is that a lot of times these moves will come really in the span of just a few minutes. And it's just, we get these massive moves that just get a lot of FOMO behind them. But most of the time, you're just sitting there twiddling your thumbs, wondering what to do. Something else I want to bring to your attention here is, and I'm going to grab this thing and go over what's called the average swing length. So let's pull this up to this length of a swing. Okay, and let's compare that versus this move. Oop, it's about the same thing. All right, so average swing length, I do tend to see from time to time. Now, I don't know if the average swing length is going to top out here or if we're going to top out somewhere up here, which would bring it all the way up to 10,000. So we may have the next reaction should be an average swing length. And again, it's either going to be coming from the bottom here at about 6,500, or it's going to get a head start maybe around 7,000 or so. Now, I don't want to be too presumptive that the downside move is over. We still have this massive weekly trend to the downside, and that has not really changed. So I'm just kind of projecting here, if this turns into an inverted head and shoulders, and if we do pop to the upside, we have some upside targets that might, at least in the short term, tell us where this might end up. And we don't know if this is just going to turn out to be another lower high anyway, and then roll over, and that would be a lower high at a larger time frame. Remember, the larger pattern that we're dealing with here, and this is going to test everybody's patience, is just this mammoth kind of a triangle pattern, quite honestly. So even if we do get a little bit of a pop up, that is not necessarily going to be the one, right? It's not necessarily the one. It could just be going in this pattern until we finally break, and then maybe save John McAfee. Okay, so that's one way looking at it is the price. The second thing I want to look at is the energy. And on the weekly chart, we do have a fair amount. It's not a full load, but 50 on the chop scale is pretty good. There's a fair amount of potential energy there. And as we look at the daily chart, there's a lot of it there. So we're back above the 50s, right? So we're into the near the 60s or so. And this is just a very choppy move. So the spring is wound up. This thing is ready to move. All we're lacking at this point is some type of a catalyst to push us one way or the other. Now, last week at this time, I had talked about potentially putting on a straddle because we had a ton of energy and it was looking like it was ready to go. And we got that initial move to the downside. And now we're back up again. But right now, I still think that this is not a great time to add a straddle, even though their potential is there for the energy. And the reason is really because of this guy here. And you can start to see we have the red line is realized volatility or price volatility or historical volatility, whatever you want to call it. The blue line is what we're really interested in. And what we're starting to see is the blue line is starting to rise. And that's interesting because what that's showing is the forward movement of BTC versus the US dollar is starting to pick up. What does that mean? That means that option traders think that, say, 30 days from now, we're going to see a lot more volatility than today. So you might think, oh, well, that's good. Then we should put a straddle on there. Well, not necessarily, because guess what? They've already priced in. Markets are extremely efficient these days, or have been for a long time. And so they've already priced in a larger move. So you have to have a bigger move than even that they're pricing in for you to make money with a straddle. So straddles are best done when you have low relative implied volatility, like everybody's just gone to sleep in the market, not anticipating anything, and a very small forward move is priced in. Let's go over to our option chain and see what we have priced in through the end of this year. Well, or the end of this month, excuse me. So right now we have about a $7,400 price point, and so that's pretty close to $7,500. And so what I'm going to do is just do a quick screen capture here, and around 7,500, we're going to grab the at the money puts and calls. So if I look at these two, the midpoint is going to be somewhere around 413. So we'll just put in that 413. And if we look at the midpoint between these two, it's going to be about 436. If we add those two together, we're going to have an expected move into the end of this month, and that's going to equal 849. So I'm just adding up these two, the puts and the calls at the money, 849. There we go. Okay. So we're going to take this price up here, 74.38, plus and minus that 849 number. And so that's going to give us kind of that probability cone that we're going to look at here of 82, 87, and then 65.89 to the downside, 65.89, which is actually good. That's above 6,500. So let's go ahead and chart those out and see how that looks. All right, so here's the one I did a week ago, and it's still within the expected move envelope. So let's go ahead and just move these. I'm going to actually take these off of here just to give ourselves a little bit more room. And I'm going to swing this one down to about 82, 87, which I really don't have to move that much at all. 82, 87. There we go. Didn't have to move it at all, hardly. All right, and this one is going to be moved up to 65.89. 65.89. All right, close enough. And then we're just going to swing this one in here. That's our probability cone. There's a 68.2% chance that the price is going to be inside of this cone between now and the end of the month. So if your target up here is that we're going to have a big move one way or the other because of the energy, and it fits the swing length, the average swing length, then adding a straddle is not a bad idea. So we've already seen what the price of the straddle is, which would be $849 if you want to leverage one BTC, or if you went with 1/10 of a contract, that's going to be about $85. Now, I'm not going to take the trade because I don't like to take straddles when the implied volatility is rising. I like to add these things when I don't have any headwinds going against me. So more than likely, this is going to be sort of, there's a very good chance that the price is not going to make an explosive move. It's just going to sort of grind in one direction or another. Now, something else that we can do is we can actually add a call spread. So if your target, if you think that this is going to move higher from here and say, all right, I want to take that swing, but I want to use options. I want to use a little bit of leverage. And then what we can actually do, and I'm just going to go over to the position builder, is to add a vertical spread. And this is a little bit difficult in something like Deribit or LedgerX or any other options platform in today's market, just because you can't enter this as one trade. You're going to have to enter one long. Once you enter the long at 7,000, then you have to enter the short call at 7,500. What this is going to do is create this type of a profit and loss graph for you. Now, this is expiration, and the way it's going to look like right now is going to be something like this. And then as the time goes by, so it's still going to have a little bit of a movement here. As time goes by, what happens is it starts to become more and more like the red line, like this. So as time goes by, and again, this is into the end of January for these options. Now, what's nice about this is, again, for a whole one BTC contract, again, you're looking for somewhere like a $250 profit, and you're risking about $250 as well, too. So it's not perfectly unity right now just because you can't straddle those strikes. So what I mean is the price is closer to the short option than it is the long option. That means that you're paying a little bit more for that intrinsic value of that long option. So the price of this is just the difference between these two, which is going to be roughly about, for a full contract, about $250. Or if you want to play a 1/10 of a contract, it's going to be about $25. So the advantage of something like this is that you have a directional trade that allows you to stay in it for up to the end of the month. I guess there is going to be a fuse on this thing, right? It only lasts up until expiration, but you're leveraging far less capital. In this case, you could set up the trade for even $25, and you're looking for 1-to-1, right? So you could make up to $25 on a trade that you spend $25 for. Can't do that if you're trading the spot currency. One of the other things I want to bring to your attention is trading Digitex. Now, I went into a whole session on this on the Trade School on Friday. So if you're an OMNIA member, go check out the video that I did on Friday. It's in the archives for Trade Schools. And I went into a session on how to use something like this aggr.trade site. And it includes a 10-second chart. And it's going to be much, much better for you to trade today's low volatility with a Digitex type scalping arrangement. So if you're just trying to figure out what the current range is, it's much easier to figure it out on a much shorter time frame chart that shows all this, particular, in this case, the support and resistance is quite well defined. On this chart, these are actually not bad. It's still free for right now. So aggr.trade is something you might want to take a look at if you're trading Digitex. Now, Digitex is still in the testnet environment. There's still a lot of things that we can't do with it, but this will raise your game. This will raise your skills and get you ready for when this thing does go live. All right, guys, we'll see what happens this week. Things are starting to get more interesting as we get into 2020. Thanks for listening to today's session. I'll see you around this week. Take care.